and welcome to Retirement Revolution. My name is 𝗀𝘂𝗃𝗲𝘀𝗃, and I'm joined today by Randy Locklear. He's president and founder of Gulf Financial Group. Randy, how are you today?
I am fantastic, Cynthia. I'm really excited about today's show.
I am too. I'm so excited about today's show, and I know that you've been so busy. Let's talk really quickly about life in the office since being on the air.
Well, you know, our days are filled with client meetings, and so what we generally do is have several of those, and we're reviewing statements and helping clients build financial plans, and it's just been a blast. We've been really well received in the community, and we're looking forward to growing our practice and serving more people in the Panhandle area.
Absolutely. And so many people right now that are watching the show, they may not have a true plan in place for retirement. You are someone they can call and come in and see, and you'll be able to design a plan for them.
Oh, absolutely. Now, so if you make an appointment, you're going to get to see me personally. I'm going to sit down and we're going to, much like a lawyer would say, I'm going to do discovery. I'm going to ask a lot of questions and I'm going to listen a lot, because I want to have a full understanding of what your situation is financially, what your life is like, what your goals are, and then a true financial plan is going to be built around that. So it's certainly more complex, more detailed than I've seen from any other advisors that are out there. You should really come in and talk to us and experience that for yourself.
Absolutely. Well, Randy, today's show, I love the topic of this, biggest mistakes in retirement planning. And we've all made mistakes. So let's talk a little bit about what are some of the biggest mistakes in retirement planning?
Well, there's a few, but there are some big ones. You remember back David Letterman used to have his top 10 list, right? Well, I've got 11 on the list today.
Okay.
But we're going to hit some of the top mistakes that people make in retirement. And you know, number one is we've all heard a failure to plan is a plan to fail, right?
Absolutely.
We've heard that since we were children. Well, that's certainly the case with a financial plan, right? We need to have one, because in many cases, just the process of going through developing that plan, or maybe I take my existing plan and I look at it again, right? It's going to uncover maybe income gaps, maybe fees, maybe risk. You might find out, hey, I don't have enough money to retire and I need to work a little bit longer. But it's that planning process that really uncovers the situation we're dealing with so that we can help our clients achieve a successful plan, which is what we want.
Okay. And a plan is a great way to spot potential hurdles and create long-term goals, correct?
Absolutely, right? So that's going to require us to go through the discipline of saying, hey, where's my income going to come from 15 years down the road? Yeah. Do I have any scenarios in which I might have a big expense upcoming, or where there's a gap maybe in my income because one spouse might be quitting a job and that income stream could be gone, or there could be different scenarios in which it might change. But if we don't sit down and take a really hard look at it, we might not see these problems until it's too late. And so that's what the plan is really going to help us do, is to uncover potential problems so that we can begin to develop a solution today for those problems.
That makes sense. That makes sense. Thank you, Randy. What about forgetting about taxes? Number two.
Well, you know, it's key. We've got to consider taxes. Now, here in our practice, what we believe is that the order of withdrawal strategy, when we start to consume our retirement assets as income, okay, we have different, it's not a bucket list, right? But I call it bucket theory, right? I've got buckets of assets. I might have a 401k, I might have an IRA, I might have a Roth, I might have savings, I might have life insurance policies, I might have a home. So I have all these assets in different areas. So when it comes time to start drawing on those assets to create an income stream, we need to do it in a tax efficient manner. Okay? Can we withdraw on Roth accounts, for example, early in our retirement where we don't have any taxes to pay, or maybe even save those for later, right? Are there ways that we can alternate where the money's coming from to meet our expenses in any given year so that we can have the minimal tax impact? And if we can save money on taxes, we're definitely going to put more money in our pocket.
That makes sense. That makes sense. Now, what about diversity into the tax accounts, if you will, the Roth IRA? Let's talk a little bit about Roth IRAs as well.
Sure. And so I have lots of conversations that center on Roth IRAs right now because we are in a period of extremely low personal tax rates, as they have been historically. We're also in a period where there's a new administration and we could have higher tax rates in the future. We don't know that for sure, but a lot of people are betting pretty strongly that we could. So if we look at maybe converting our IRA or our 401k assets now from a traditional qualified account into a Roth account, what that means is we're going to pay taxes at the current rate. And then later on, when I draw on those funds, I've already paid the taxes on them, and that'll create a tax-free stream of income for us in the future. So we've done a lot of Roth conversions in the last year or two with the fear that people have that tax rates are going to increase, and if I'm going to have to pay taxes, I should pay them while they're lower. Which makes a lot of sense for a lot of people. Now, that is something we have to look at. We don't want to do Roth conversions if you're still in your big earning years and, you dump that extra income into the tax plan and it raises your tax bracket. So it's something that you need to sit down with somebody that has a lot of knowledge about the tax code and your income that can help you make a plan to minimize those taxes in the long run.
Okay. Thank you, Randy. What about, this is a big one, overpaying fees?
This is really big, okay? Just a small overpayment of fees, let's say in that 1% range over the life of savings, okay? Just minimal could make $500,000 difference in what your account balance is.
Wow.
It has really dramatic effects in the long term if we're earning 1% or 1.5% less than what we would be earning if we're not paying too many fees, and most people do not know what they're paying in fees. I find this over and over again. They say, oh, well, my advisor is just charging me 1%. And that sounds pretty reasonable. But when we look into the situation, lift up that hood and look down at what the fees really are, we find out that there are mutual fund loads, expense ratios, 12B1 fees, all of these things that can be added in that people don't even know that they're paying.
Wow.
They're not listed on the statement. But at Gulf Financial, we can look deep into that situation and figure out exactly what your fees are, maybe find some opportunities to eliminate or reduce those fees.
Because they'll be like little termites otherwise.
Yes, they will. Exactly. They will eat a house down from the foundation, and those little fee termites will do the same thing to your investment portfolio. So, especially over time.
Oh,
okay?
absolutely.
Over the long period, even a small increase in the fees that you're paying can really have a dramatic effect. I think it's a great idea, number one, to find out what are my fees. Okay? You're going to get an answer on that question if you come visit us.
Well, this is the perfect time for us to open up the phone line, Randy. To the viewers at home, what do you think?
Give us a call.
All right, sounds good. To the viewers at home, the phone lines are now open. That number to call is 833-403-4041. What Randy is offering you today to the first 10 callers only is a complimentary consultation. Let him take a look at what you currently have in place. Is it the right plan for you? Does it need to be tweaked, adjusted, or perhaps created from scratch? This opportunity is available to the first 10 callers only. So all you have to do today is pick up the phone and call 833-403-4041. We have to take a very short commercial break, but when we come back, we're going to keep going with the list of mistakes, and you're not going to want to miss what else Randy has to say on that list.
How confident are you in your current financial plan? Do you know with certainty how the recent market volatility will affect your future hopes and dreams? How much are you paying in taxes? And how much are you losing to unnecessary high fees? You didn't work to save this money so that you could spend your time worried in retirement. Now is the time to take charge of your finances so you can feel confident about your future. Call in during the next 30 minutes of today's show only to set up an absolutely complimentary, no obligation, full-blown financial review that will result in your own customized written plan. This is a $999 value that we're giving away complimentary to the first 10 people who respond. We'll start with a full-blown analysis of what you already have. by running a report to untangle how much you are currently paying in fees, how you're allocated for risk, and what it's costing to work with your current advisor. Next, we'll identify your goals. Where do you see yourself in the next 5 years? Where do you want to go, and who do you hope to go there with? Is your current financial plan set up to get you there without mishap? Let's design a roadmap to create a financial plan you can follow with confidence. Get the piece that so many people are missing from their retirement. Find out how having a written plan can make a difference to your retirement dreams. Call now to schedule your complimentary, no-obligation, full-blown financial review today.
And welcome back to the Retirement Revolution. My name is 𝗀𝗵𝗹𝗲𝘀, and I'm joined today by Randy Locklear. And Randy is president and founder of Gulf Financial Group. Randy, a great show we're having today. Obviously, the phone lines were going crazy when we went to the commercial break. I know people want to come in, they want to sit with you and have that complimentary consultation. So thank you for offering that today.
Yes, indeed. I encourage anybody to give us a call.
Absolutely. Well, let's keep jumping through this list of mistakes, okay? Number 4, tapping into savings before retirement. Wow.
Well, this is a big one, right? So as we're growing our retirement assets before we retire, okay, sometimes we run into a pinch and we need some money. And so the temptation is there. We say, hey, let's go grab some out of my IRA or my 401k to solve my short-term need for some cash. The problem with that is that we pay huge penalties for that. If we're under the age of 59 and a half and we withdraw money out of our retirement accounts and don't put it back within 60 days, we're going to get hit with a 10% penalty. In addition, we're going to have to pay taxes on that, so we're going to get a 1099 as regular income for the year. Generally, if you withdraw assets out prior to age 59 and a half from your retirement funds, you're going to take a 50 or 55% total hit against that money. We don't believe that's a smart decision. Most people that take money out, they say to themselves they're going to put it back in, and we rarely see that happen. And so we would strongly encourage you, continue to save as much as you can and don't tap those savings before retirement age.
Randy, thank you so much. What about taking on too much risk or not enough risk in retirement?
Well, see, it's either or, right? So if I have, let's say, I have a complete bond portfolio and I'm paying fees and it's earning, 1 1/4, that's not enough return. So we might want to interject more risk into that scenario so that we keep up with cost of living. But too much risk, that's a problem also in retirement. We don't want a portfolio that we can lose half of our money if we have a big market correction. So there's a fine line between, too much or too little. But at Gulf Financial, we're going to sit down with you, look at your situation and your asset mix through deep conversations and listening to what you have to say. We're going to understand where you stand on that risk continuum so that we can build a portfolio that's perfect for you.
Randy, thank you so much. What about failing to save enough money during retirement?
Failing to save enough money. So one of my favorite Albert Einstein quotes is, he said, even more powerful than the theory of relativity is the time value of money. I mean, do you know, if I start at age 20 and I'm just putting in $150 or $200 a month, do you know at age 65, 67, we're talking about millions in a retirement plan.
Wow.
So we want to encourage people to make regular savings as much as they can afford and to do it on a monthly basis. Okay. If you're in the middle of that situation, you don't know whether you're saving enough, come and sit down with us. We can look at your spending, your asset mix, and we can help you create a savings plan that's going to generate the income that you need in retirement. But we encourage regular savings prior to retirement for everybody.
Okay, thank you so much. What about trying to do it yourself?
Well, this is a funny one, right? So if I've got a pain in my side and I think I've got appendicitis, I'm probably not going to go in the kitchen and get out a steak knife and say, I'm going to solve this here.
Right.
There are certain situations that require skills set of people that are professionals that know about how to manage money or to offer you medical care. There is certainly a science to investing. There's a little bit of an art to it. But for me, it's a numbers game. So it's really, really important that you partner with somebody that's going to be your financial advisor that has a deep understanding of how to properly manage your portfolio to deliver the results that you want. So I know that in my time at the big box places, we had a lot of self-directed investors, and these investors almost always underperformed the regular market indexes, okay?
Wow, okay.
So you might be doctor, lawyer, or Indian chief, right, in your current profession. It doesn't make you an investment professional, though. And so certainly you want to seek out good, highly qualified assistance for retirement planning.
I could not agree more. Great advice, Randy. Thank you so much. What about not dealing with the fiduciary? That's a huge one.
Well, at Gulf Financial, we're a registered investment advisory firm, okay? By law, registered investment advisor is what's called a fiduciary. Now, if we sum up what fiduciary means, I think we can say it in one word, and that's trust. Okay, trust a fiduciary. So as a fiduciary, what that means is I'm required by law, the Securities and Exchange Commission requires me to always act in a client's best interest. So if a client were to pick up the phone and say, you know, Gulf Financial didn't act in our interest, then there would be a regulatory action or some kind of sanction or a possible lawsuit. Fortunately, we've never had that happen. Okay. We are always going to act as if we are the client. How can we develop a plan to make sure that we meet the client's needs completely? And we must always act in your best interest. If you go to certain investment shops, you're going to find out they're not fiduciaries. They might not sell you what's best for you. They might sell you what's best for them in terms of high commissions and fees. If you deal with a fiduciary, you won't have to worry about that part.
And who wouldn't want to deal with a fiduciary? Because obviously you want to work with someone that's putting your best interest above their own, right?
Absolutely.
Absolutely.
You know, and I'll mention to you with that, sometimes we go into a situation, we look at a financial plan or a situation, and if we can't make it better, a fiduciary is going to come and say, hey, Cynthia, you have a great plan, and I really can't recommend any changes for you at that time, right? So that's kind of the responsibility of a fiduciary, is to be truthful and trustworthy and to always act in the client's best interest.
Randy, thank you so much. What about number 9, failing to plan for income streams first? Okay,
so we're going to start consuming our retirement assets after we retire, right? We're going to begin to spend that money. But what we think, again, we say job one, right? Let's go ahead and make sure, this is how we do a plan, right? We're going to look at incomes and we're going to run them out to age 95. We're going to find out if there are any gaps. We know that we've got to solve that income problem first. And if we can do that, then everything else usually falls into line and it's going to be okay. So certainly one of the biggest mistakes that people make during retirement is they say, hey, I'm going to be able to withdraw out 4% of my portfolio a year, but they don't have an income plan. They just have a hope. Well, a hope is not a plan.
Right. That is so true. That is so true, Randy. This is the perfect time for us to reopen the phone lines to the viewers at home. Do you agree?
I agree.
Okay. To the viewers at home, the phone lines are once again now open. We started the show today with 10 complimentary consultations available. We only have 2 remaining spots. The number to call is 833-403-4041. Again, what Randy is offering you is the opportunity to come in and sit with him, have a beautiful plan that's written that's going to suit your needs for retirement. Again, 2 spots remain only. When we come back for this very short commercial break, we have the final 2 mistakes we're going to talk through with Randy, so don't go away. We'll be right back.
As a good saver, you've been putting away money during your working years. Studies find that the biggest fear of retirees is running out of money. Market volatility isn't just a downward movement of stock prices, it's the size and frequency of change. The more dramatic the ups and downs, the higher the volatility. This can put savers who are newly retired or a few years away from being retired at greater risk. Today's generation of retirees is not receiving traditional pensions as our parents or grandparents did. Instead, we have retirement accounts such as 401ks or 403bs. These accounts typically expose your money to market risk. The last thing you want right before retirement is to lose a portion of the money you need for income. But how do you turn these accounts into a retirement income? Is it safe to keep all your retirement money sitting in the stock market? The last thing you want is to lose a portion of the money you need for income due to market loss. By working with a financial professional, you can learn how to turn a portion of your savings into an income stream for life and income for the life of your spouse if you're married. We all have moments in our lives when we wish we had taken action sooner. Don't let procrastination reign on your retirement parade. Act now before it's too late. Please call our office to set up your no-cost, no-obligation retirement income review today.
And welcome back to the Retirement Revolution. My name is 𝗀𝗵𝗹𝗶𝗀𝗀𝘀, and I'm joined today by Randy Locklear. He is president and founder of Gulf Financial Group. Randall, a great show that we're having today. And again, I can tell by the phone lines lighting up like crazy. And I love the fact that people want to come in for the complimentary consultation that you are so kind to offer to the viewers today. So thank you for doing that.
Oh, you're welcome. I look forward to seeing folks as they come in.
I do too. It's going to be great. So we have to get through 2 more mistakes. I know we have a list of 11. So now we're on number 10. Ignoring long-term care. Wow, let's talk about that one.
You know, most people don't have a plan for long-term care. There's a few people that I run into from time to time that have long-term care policies that they've bought a while back, you know, and they do have a plan. But the vast majority of people that we talk to on our first visits, they don't have a plan for long-term care. And so it's very expensive to provide for yourself long-term care or your spouse, especially in the state of Florida. A lot of people think, well, if I give away all my assets, then I can qualify for Medicaid, and then I might not have to pay for long-term care. But it's really difficult to qualify. You have to give away basically every penny that you have and be destitute for a period of time before you qualify for Medicaid long-term care. So at Gulf Financial, we believe that it's important to let's own up to that issue. Let's face it. What's going to happen if we have a long-term care or some kind of catastrophic health event that requires us to have maybe somebody come into the home or to provide medical attention for us? And so one of the key things that we do is we help clients build an asset pile to be available for long-term care. We help to create income streams that double if you have to have a long-term care situation where if you or your spouse has to go to long-term care. We can use annuities to create income streams that increase in that scenario. So if you don't have a plan for long-term care, come and sit down with us and we'll talk to you about ways that we can put one in place.
And Randy, did you say that 35 to 40% of people need long-term care?
Absolutely.
Yeah.
And if you talk about people over 65, it runs more like half of us will probably end up in some time of long-term care or assisted living facility, and far less than 5% of people have any kind of plan for it. So that leaves a lot of people that are putting a lot at risk.
Sure.
You know, I don't care if you have $1 million portfolio, $90,000 a year of long-term care for a spouse and a partner, right? It's going to wipe through that in pretty quick order. So we want to make sure that that doesn't happen.
Absolutely. Randy, thank you so much. And we're down to number 11 out of our list of the mistakes here. Buying a variable deferred annuity. Let's talk about that.
Okay, well, we like annuities for a lot of reasons, but we don't like this one for a lot of reasons also. So there are a lot of major carriers out there that's offered what's called a variable deferred annuity. And what that means is that the assets that back the annuity are actually invested in the market. So Cynthia, if you were to say, here's my 401k and I buy a deferred annuity with it, that money's going straight into a market index, okay? You have the ability to select what that is, but that means that those assets are at risk. So in a market crash situation, even inside an annuity in this scenario, could I potentially lose some or all of my money? Well, yes, you could, okay? We don't believe in variable annuities. We believe if you want to have market exposure, we can develop low volatility portfolios that have potential for high returns and not have to charge you the fees. Okay. Another thing about variable annuities is the fees are extremely high. There are mortality expenses, there are guaranteed income expenses, there are account management fees that go into managing the separate accounts, and so we think it's a pig in a poke, a bad deal. If you have a variable annuity, you should give us a call, because if there's a way that we can find for you to get out of it and to move to something that's safer with less fees, more potential for return, we would be happy to sit down with you and talk to you about doing that. But if you've got one, you should probably look at getting out of it. And if you're thinking about getting one, don't.
Okay, okay. Randy, with all of these mistakes we've talked about, all 11, what is the one thing that people can do to avoid those mistakes?
Well, I think that sitting down with a professional is probably key. So it harkens back to planning, okay? Some of you may have plans already, okay, that were developed maybe a long time ago even. But just the process of let's get my statements out. Let's take a look at everything that I have. Let's take a really close look at what we're spending now, what we might be spending in the future. Look at all the income streams that are associated with it. Even if you have a current advisor, it's great to get a second opinion.
Sure.
Because you might find out some things about your portfolio in terms of the risk or the fees that you didn't know. And, you know, sometimes there's a better solution out there. That's all a part of what we talk about on the show Retirement Revolution is, can we change things for the better? And in a lot of cases we can, but we're not going to know unless you take the time to come and sit down and talk with us and get a second opinion on what you're doing.
Absolutely. That's the most important thing, is picking up the phone, calling in, taking advantage of that complimentary consultation so that they can be assured that they are all set on the right path for retirement. Well, Randy, we have about just a couple minutes left of the show this week. Any final tidbits of advice that you'd like to give the viewers at home today?
Yes, certainly. And that would be a retirement plan. It needs to be a long plan, okay? Most people that are 65, if you're 65 and a male, you've got 19 years of life expectancy left.
Okay.
A study I was reading recently showed that only 10% of Americans are prepared financially to deal with a 30-year retirement.
Wow.
Where we're all living a lot longer than we used to. Medical technology is improving all of the time. So the chances are that we could have a very long retirement. But that also increases the chances that we could run out of money if we live a long time and have to spend a lot of money, right? So I think it's crucial to sit down and look at a plan that's going to run all the way through, say, age 95 or age 100. I've even got a few clients in their 90s. Hello out there. But, don't get in front of me in traffic. I'm just kidding. But so we hope you live a long time, and we want you to be happy and fruitful and have the assets to support it. So make sure that you get a plan that shows income throughout all of your retirement years, and that it runs out far enough to cover all the contingencies. And if you'd like to do that, give us a call. We would be glad to put one together for you. And all it takes is just coming to sit down with us, an informal conversation, a half hour or so. We ought to know at the end of that meeting how we'll be able to help.
Randy, thank you for another amazing show this week. I always look forward to our time together. To the viewers at home, don't miss the opportunity to call 833-403-4041. Be safe, be happy, be blessed. We look forward to seeing you back here again next week. Thank you for watching.
Bye-bye.